It was a steady quarter actually for Teamlease services. Operating margins, however, remained under pressure for the overall business as well as for the general staffing business. Let's discuss the quarter gone by with Mr. Ravi Vishwanathan, who's the CFO of the company. Mr. Vishwanathan, hi, good afternoon, and thanks a lot for joining us. The revenue growth that you've posted of about 15%, you think it could have been better? And give us a sense with regard to margins. We've not seen much of expansion, what most of the analysts were factoring in this time around.
Yes. Margins have been under pressure. Due to the fact that the growth in the general staffing business did not happen. There has been slowdown, the slowness in the economy. We thought we were a little immune to it in the first two quarters, but no, it did get to us in Q3. Some of the large deals that we were pursuing got shifted to Q4. The good news is that most of the other businesses seem to be coming back on track for us. So as we come into Q4 and get into the first quarter of next year, we seem to be in a better position than what we were same time last year, given that all the other businesses, whether it's specialized staffing, other HR services, the associate companies, all of them are on the positive track. General staffing also should come back on track soon because we have done all the right things. And as a company, we feel pretty confident as we get into Q4 and prepare ourselves for Q1 and for the next year.
Okay. Sir, you spoke about general staffing and the other business as well, where the realization, talking about the general staffing, which has seen some bit of improvement to about 751 versus 739, which was there in the September quarter. Do you expect these realizations to even move higher in the coming quarters?
See, this realization for us, which is what we call the per associate per month, kind of grows by about 5 to 6% annually. That's the number that actually, historically, that's what it has grown by. While we are making efforts to come up with newer products which will take it significantly higher, those have not hit the market yet. So currently, we can expect a 5 to 6% growth in these numbers at a minimum every year.
What about the specialized staffing, which gives you a better margin in terms of revenues from that segment, sir? Is it still just about 10 to 15% of the total revenues? Do you expect that contribution to move higher, which can even improve your blended margins going ahead?
Absolutely. You hit the nail on the head. The specialized staffing business, we are targeting a growth of anywhere between 18 to 25% next year with a lot of costs that have been rationalized at the back end. So we should be able to get to better growth than what we have seen in the current year. We brought new leadership on board, costs have been rationalized, teams have been restructured. So like I said, all these are making us feel that we are on the right track as we get into Q4 and Q1 of next year.
Okay. In terms of, breakup with regard to government revenues right now, what does it stand at? And in terms of receivable pictures also from that segment, has it been on track, sir?
We have been able to collect a fair amount of receivables on the government side. I wouldn't say it's completely on track, but we have been able to collect. One thing that we have consciously made a decision to slow down or exit the government business over a period of time, and that exit will probably happen only in about a year and a half or 2 years from now. So, which means that you will see a reduction in the government revenues over the next many quarters, actually, as we exit the business totally. But having said that, I must say that the receivable position is much better, which is giving us hope that we will not be required to make huge provisions like what we did in Q1 of this year.
Fair enough, sir. So you're suggesting the aim is to completely reduce exposure from the government side, and also if you could help us, what's the outstanding receivables as of now in terms of number?
The outstanding receivables would be in the region of about 20 plus, about 20 to maybe between 20 to about 25 crores right now, which will come to us over the next 1 year.
Okay. And in terms of various sectors, I think there's been concern about telecom as well. Have you witnessed any sort of slowdown? What sort of exposure do you have to that sector?
Telecom exposure should be, the telecom staffing business is again back on track. Like I said, our exposure is pretty limited, but we again work only with the OEMs and not with the service providers, so that's actually okay for us. Having said that, we have paired our exposure towards certain low-margin deals that the telecom staffing business had taken up over the last 18 months. We have exited most of those businesses, and today, I think, like I said, we are in the process of signing up some better deals on the telecom staffing side, and which is giving us hope that that sector is not all out, but there's still a lot of hope as far as that sector is concerned.
Okay, so one more quarter to go for this financial year. Hoping that this quarter so far has been better for you guys. But what sort of targets, any internal targets that you guys have for FY21? How the new financial year can be different from the current one?
See, we've always said that we're going to be a consistently warm company, targeting a minimum of between 20 and 25% top-line growth, and maybe a 30 to 35% bottom-line growth, which is what it has been so far. You can expect something on similar lines for next year.
And in terms of margin, do we see that expanding with more revenues coming from specialized
100%,
staffing?
100%, without any doubt. Without a doubt, the margins will be expanding as we get into next year.
Yeah. You give us a range, sir. What territory could that be?
I'm sorry, we don't give guidance, so I'm afraid I will not be able to answer that.
No worries. Just one last question. Any more acquisitions then you guys are looking at? I think recently you had done one or two.
We did one recently, but there's nothing on the table right now.
Okay, Mr. Vishwanathan, appreciate you joining us and all the best to you for quarters to come.